Let's find the net value of a stock that doesn't pass. Hey guys, how's it going? My name is Charlie Marr and welcome to video 2.1. I decided to actually throw another video out there, but this time of an example of a stock that doesn't qualify. So now you saw one that does pass, and now we're going to go over one that won't qualify. I don't think it'll qualify, and then we'll go back to part 3 and part 4. So just a quick recap. In part 1, we went over the terms and the formulas that you need to understand to know how to work and find net stocks and start following that approach of finding stocks below net liquidation. In part 2, we went over a live example of a stock that qualifies and that passes and it's trading below its net value. In this part 2.1, we're just going to go over one that doesn't. In part 3, I'm going to share with you things to avoid, red flags to avoid, things to avoid so you don't fall under value traps and you protect your money further and just further evaluations. And in part 4, I may release a video on how to scan and filter these stocks. It's something that to me is personally very private and I don't necessarily like sharing it, but maybe I'll throw it out there, Maybe if there's enough likes, videos, and comments, I'll share how to filter and scan them and narrow down your list. And then I was thinking of making even a fifth part 5 that it's more advanced, so it's things that you can do to make this even a better valuation, and then that'll be the end of this whole networking. So let's go over this example. So we're going to go over Charles & Colvard. This is a stock that I did trade back then, and I made a lot of money with this stock. I don't believe it was trading under net value, but it was trading under my other method, which is very similar approach. It's just my own evolved version of today's world of the net. So let's go ahead and go down. By now you should know the formula and what we're about to do, but let's just go over a live example. So the first thing we need to do is grab the total cash. So let's go ahead and put this in. So the net, why do I always put in M's? The net, the net working capital equals, let's grab the cash. So we're not going to do anything with the cash. That's 14.1 million. So that's 14.1 million in cash, and this is based off the last reported. Now we're going to do is going to grab a total receivables, and we're going to actually multiply this by 0.75. So we're going to be using 75% of this. So let's go ahead and do that here in the calculator. Total receivables is 2.9 million, so 2,900,000. We're going to multiply by 0.75. This is what we're going to be using. It's 2.175 million. So plus 2.175 million. And then we're going to add half of inventory. So we're going to discount inventories by 50%. And here it is, inventories, it's 12 million. We don't need to do the math for that. Divided by 2 is 6 million. So let's go back here and we're going to add 6 million. And then we're going to divide, we're going to subtract all this by total liabilities. So let's go ahead and add this up first while we're here. So we have 14,100,000 plus 2,175,000. Oops, too far. Plus half of inventories, which is 6 million. Okay, so that's 22,275,000. Now we're going to subtract the total liabilities. So let's go ahead and scroll down. We're going to go all the way down to total liabilities. Total liabilities, we're going to subtract 9.5 million. So minus 9,500,000. So the net working capital of this stock is 12,775,000. So the net working capital is 12,775,000. Now let's go ahead and find the per share value. So all we have to do to find the per share value is we're going to divide by total shares outstanding. So let's go ahead and scroll down. Total shares outstanding on filing date, that's 30,400,000. So divided by 30,400,000. That leaves us with 42 cents. So that is the net working capital per share of this stock. Let's go back to the sketchbook, and it's 42 cents. So this stock 42 cents. Now, based on the net working value, the net, now we want to multiply by 0.666. So we want to have a margin of safety. So we're going to deduct this value that we just came to get a margin of safety. You know, it's room for error, room for the company to slow down and all that stuff. So that's 0.42 times 0.6, any amount. It's a repeating number, so 0.28. 0.28. So if you're doing the net valuation method and you're going based off Ben Graham's net, this stock would only be a buy if it's trading at or below 0.28, while its value stands at 0.42. So let's go see where that stock's currently trading at. It's currently trading at $2.89. So this stock does not pass because it's currently trading at $2.89. So this stock does not pass. Now, you saw me value this stock before and it passed, but that was my own personal approach, which is an evolved version of this, which is called CMAR, and it's a little bit different. We work with the whole balance sheet versus just current assets, and it's a little bit more advanced, and then you have more room for error. But anyways, this is the net working capital value, and this is an example of one that doesn't pass. Anyways, guys, it was great talking to you guys. Make sure to like, comment, and share. Subscribe to my channel. And on part 3, we're going to go over some things. I almost had a list there. Some things that you should avoid. What stocks you shouldn't be doing this with. What are some red flags to look out for? Even if this stock passed, there's certain things you should watch out for that could help you avoid a huge mistake and, get a better valuation. So I will see you guys on the next part, and then on the fourth one, we'll go over whatever part we're on. We'll go over how to scan and filter and try and find these stocks and hone in on all these possible nets. So I will see you guys in the next video.